All right, today we're going to try to make sense of something that, on the surface, just doesn't add up. We're looking at a digital asset company called BitMine, ticker BMNR, and a really confusing call from a major Wall Street firm. How on earth does a company get its price target chopped nearly in half, but at the exact same time get a strong buy rating slapped on it? It feels completely backward, right? Well, that's the puzzle we're going to solve together.
So check this out. This is the paradox right here. The analyst firm B. Riley takes their price target on BitMine from a super bullish $90 all the way down to 47. I mean, that's a brutal cut, reflecting just how tough the crypto market has been. And yet, here's the kicker. They don't downgrade it. They don't even move to neutral. They actually double down and reaffirm a strong buy. So what in the world is going on? How can both of these things possibly be true at the same time?
You know, the key to this whole thing isn't buried in some complex trading algorithm or day-to-day market chatter. No, it all boils down to one single, incredibly powerful idea that old-school value investors absolutely live by.
And that idea is called net asset value, or NAV for short. Think of it like this. If a company sold everything it owns, every last bit, and then paid off every single one of its debts, the pile of cash left over, that's its net asset value. And for BitMine, this one number isn't just a part of the story, it's the entire story.
So what kind of assets are we talking about here? Well, BitMine is sitting on a verifiable liquid treasury worth an immense $13.3 billion. And get this isn't stuff like factories or real estate that's hard to sell. We're talking about things that are basically like cash, ready to go.
Now here's where it gets really interesting. Compare that asset value to what the stock market says the whole company is worth, its market cap. Right now, that's sitting at $13.18 billion. Wait a minute. That's actually less than the value of the cash and crypto it has in its own wallet. It's kind of like finding a wallet with $100 inside that's on sale for 99 bucks.
And that right there, that perfectly captures the entire thesis. The argument is that when you buy a share of this company at these prices, you're buying its assets, the Ethereum, the cash, for cheaper than they're actually worth. And the rest of it, the actual business, the management team, their cool technology, all of that, you're basically getting thrown in for free.
So to really get this, we've got to pop the hood and see what's actually in this massive $13.3 billion treasury. Let's break down this balance sheet.
Whoa. Okay, so this is not some diversified play-it-safe portfolio. This is a laser-focused, almost all-in kind of bet. A staggering 91.7% of their entire treasury is in one single asset, Ethereum. They back that up with a huge safety net of 7.5%, about $1 billion in cash, and just a tiny sliver in anything else. It's a really, really bold strategy.
And to put that Ethereum position into perspective, consider this. BitMine holds 3.2% of all the Ethereum in the world. Let that sink in. One single company controls over 3% of the planet's second biggest cryptocurrency. This isn't just some casual investment. It's a deeply strategic position that shows they have unbelievable conviction for the long haul.
And here's how they've built themselves a fortress. In an industry famous for companies taking on huge risks and then blowing up, BitMine has zero long-term debt. None. That, combined with their billion-dollar cash pile, makes them immune to things like margin calls that have crushed their competitors. They can't be forced to sell their assets at the worst possible time. Add in their serious tech background, and you've got a company that's built to last. Okay, the numbers are pretty compelling on their own, but you know what they say, follow the money. So who else is putting their capital behind this idea? Let's take a look at who's at the table.
Now this might be the single most powerful slide in this whole breakdown. Look at what happens during market dips when the stock price falls. Regular investors, retail, they get scared and they sell. But the big dogs, the institutional funds, they were buying at a rate 20 times faster than retail was selling. Think about that divergence. While one group was reacting to fear, the other saw a massive bargain and was backing up the truck.
And who are these institutions? We're not talking about some obscure funds. This is a who's who of finance and tech. You've got trailblazers like Cathie Wood's ARK Invest, banking titans like JP Morgan, the world's biggest asset manager in BlackRock, and even legendary investors like Peter Thiel's Founders Fund. When you see names like that all making the same bet, you have to pay attention.
A lot of this confidence is being driven from the very top. The chairman of BitMine, Tom Lee, is one of the biggest voices in this space, and he's not predicting small moves. He is on the record saying he expects Ethereum to hit an absolutely staggering $12,000 by 2026. That's the kind of bold vision that gets these major institutions on board.
So it's pretty clear that this whole investment case, it all hinges on one big if, the future growth of Ethereum. If Ethereum soars, this thesis pays off big time. If it stagnates, well, it doesn't. So what are the big things that could actually drive that growth?
Well, there are basically three major forces at play. First, a recent technology upgrade called Dinkun just made it way cheaper to use the network, which is a total game changer for getting everyday people to use it. Second is tokenization, this huge trend of putting real-world assets like stocks and bonds onto the blockchain, and Ethereum is the #1 platform for that. And third, we're seeing big money make a flight to quality, consolidating their bets on the two pillars they trust most, Bitcoin and Ethereum.
And this isn't just theory, it's happening right now. We're seeing real action. JP Morgan, who, remember, is an investor in BitMine, just launched a $100 million tokenization fund. BlackRock is seeing more and more demand from its clients for Ethereum services. These giants aren't just talking about the future, they're actively building the financial plumbing for it.
Okay, so let's pull this all together. The bull case is clear, right? A debt-free company holding a mountain of Ethereum, trading for less than it's worth, with all the smartest investors buying in. It sounds amazing, but we have to talk about the other side of the coin. What could go wrong?
And that brings us right back to where we started, that $47 price target. From where the stock was trading when this analysis came out, that suggests there's over 50% upside. Wall Street is basically shouting from the rooftops that they think the market has gotten this one wrong, big time. But of course, there's no such thing as a sure thing. An opportunity like this always comes with risk. The biggest one is the most obvious. This entire company is a leveraged bet on Ethereum. If ETH crashes, so does Bitmine's value. We all know how volatile this market can be, and then there's always the wild card of a government somewhere passing some new regulation that changes the whole game overnight.
So for anyone looking at this, you need a line in the sand, a point where you'd say, okay, my original thesis is broken. For this investment, that critical number is about $2,500 for Ethereum. Why that specific level? Because that's around the price where BitMine itself made its major strategic purchases. If ETH can't even hold that line, it suggests something is fundamentally wrong with the broader market. So as we wrap this up, let me just leave you with this final big question. When you see the professional investors, the smart money, buying an asset at 20 times the rate that the average person is selling it, what does that signal? Are we looking at one of those rare moments where the pros are seeing a future that the rest of the market is completely missing? And is BitMine really the company that's perfectly positioned to win? That is the multi-billion-dollar question.